So what would you say the factors are that, move someone's rate that buyers don't know about going in?
Probably biggest thing would be down payment. So, I mean, putting down, say, 5% versus 10% versus 15 or even 20 will alter one's interest rate. And a lot of people don't realize that. That's the biggest factor, and credit score. So, for example, someone who has a 700 credit score versus, say, a 720 versus somebody with a 740, there'll be slight adjustments to the interest rate based off of those factors as well.
Score.
Correct.
Okay.
So a lot of people will see that rate posted online, but not realize what's your FICO, what's your debt to income ratio, what's your down payment, that all of those things,
So is waiting for rates to drop ever a good strategy? How do you talk to buyers who want to, time the market?
Yeah, so I mean, we use that word of marry the house, date the rate type
Yes.
of thing. It's tough. So I use the term golden handcuffs a lot.
Okay.
And I use that analogy of you have these clients or people who own homes currently with 2.8, 3% interest rates that don't want to leave. They don't want to lose that rate. However, maybe their family is growing. They need to go to a larger home, to a smaller home. And it's like, what are you going to do? You're going to wait and stay in that 3-bedroom ranch with 6 kids until the rate goes down? Or are you going to adjust and just and move? So it's a hard pill to swallow for most, especially when the rates were in the high 7s.
Yeah.
But I think now that we have a 5 in front of it, I think you're going to see on the agent side a ton of people are now listing their home because they're okay with losing that 3% rate and getting something with a 5 in front of it.
It feels better.
Yeah. 100%. 100%. And historically, you have to remember a rate in 5s is amazing.
We know that.
It's amazing. But we were spoiled during the COVID times. We'll never see those rates again,
So what's the most common mistake you see buyers make in their that derails their financing, even after they've been pre-approved?
Purchases, simple.
Yeah.
I mean, it's like I have clients that are looking to buy a home, but then have 2 car payments that are $1,000 each. And it's like, living at home, or if you're paying rent and have $1,500 in car payments, you're never going to save. You're never going to have that down payment. So I would say like purchases and stuff like that on their credit, which I get. We all have done. I'm one to say I did it too. When I started to, make a little bit of money, I was like, oh, I'm going to get a car, And looking back, it was the dumbest thing I probably ever did. But I would say car payments are probably the biggest issue
Or
for
like
most.
student loans?
Student loans, yeah, but you know what? There's an argument to have with student loans because at least you were getting an education. And it was used. But yeah, student loans. I've had clients with $200,000, $300,000, $500,000 worth of student loan debt. But I honestly would rather see that than a $1,200 car payment. You know what I mean?
So what about before they come to you? What habits or financial behaviors do you see that create problems?
Lack of education. So I mean, it's really, you got to look at it as like, where did that person get their, that I don't want to say, I don't know if education is the right word, but their advice as to like, hey, what are my first steps? So I think it starts at home. With my kids who are 14, 12, and 10, I'm starting now. I mean, I explain to them like so I think it really starts at an early age in terms of saving, home ownership. I mean, you see what rents are right now. They're almost identical to what people are paying for mortgages.
Yes.
So I really think like starting young and realizing like savings, how to use the use of credit, establishing credit, are such important things to start at a young age so that when they are in their, say, 20s, they have a good foundation and not first learning, oh, I wish I would have known this, and it's too late.
15 years ago.
Yeah, yeah.
On the flip side, what do buyers with strong files do right? What separates an easy, close from a difficult one?
I think clients that are willing to listen. I think we're chameleons in this industry where like on the other end of the line, when you answer that phone, you have a different personality every time. And I find that the clients who really come to us for our professionalism, right? You're the best at what you do. I'm the best at what I do. The ones that really listen and follow what the steps are that we tell them to do are the ones who succeed the most.
Yes.
The ones that kind of maybe drift off a little bit and take it into their own hands, or they thought they could do this and realized after the fact that wasn't okay. Asking questions is probably important, I would say.
Yeah.
And that's where I would probably see the biggest fallout are the clients who don't follow the directions of what myself or my processor or the underwriter is telling them that we need to do.
I agree.
To get to the finish line.
So let's talk about the market, specifically Northport, North Shore, Long Island. What are the financing dynamics here that are different from, say, buying in, in a mid-sized market somewhere else?
I think Northport is super unique than most places on Long Island. I don't really know if I could kind of compare Northport to really anywhere else. I find that, like, just talking from a town perspective, it's so mom and pop and so old school that's what attracted me and my family to want to live in
Yes.
Northport. It has that genuine feel that most towns don't. The lack of inventory in Northport is unbelievable. I mean, I don't even know how many houses there are. There's nothing there.
About 46 right
You have a
now.
surplus of buyers, and the prices, are crazy.
Yeah.
Crazy.
So we get a lot of buyers coming out of New York City. Some are coming from co-op buildings. Some have complicated income structures like bonuses or freelance. How does that complicate the mortgage picture?
So there's many different programs. Obviously conventional and FHA are the most popular programs that are out there today. But someone who may be self-employed or has income that isn't as cookie cutter, let's say W-2 or salaried for that matter, there's a surplus of non-QM loans. They're called non-qualified mortgages, which allows clients to qualify without having to show verification of income. They can put large down payments down.
Right.
If they own a business, they can use a program that just is a P&L. There's a bank statement only program. So there are different avenues than the cookie cutter conventional loans and FHA loans that we use probably on more of a daily basis for that type of client.
So jumbo loans come up, at our price point. Can you give our listeners a quick explanation of, a jumbo loan and what it is and what kind of buyer that's for?
Yeah, so the jumbo loan is going to be, obviously on the higher end in terms of loan amount. And what happens is when you go from a conforming loan limit to a jumbo loan limit, the underwriting guidelines usually change. So there are stricter ratios. There are minimum down payment requirements. Interest rate is going to be different. And that's really what separates jumbo land, let's call it, from a non-conforming or a conforming mortgage. And yeah, we are seeing them, but what I wanted to bring up that I've over the last couple of years that I've noticed is, and I'm sure you have as well, is we're not really doing that much jumbo loans for the fact of you have a lot of first-time homebuyers getting tremendous gifts for down payments that are taking them out of jumbo territory, putting them in a conforming loan. So I really don't do a ton of jumbos, honestly, because of that. And I've noticed that a lot of people, they're saying they're getting their inheritance up front early. Because you don't really need it when you're older, right? Like, that's how you look at it. Like, do I need it when I'm like 50, 60? Right. So it's like, if you're able to give it to your kids now to have that monthly payment a little bit more attainable, if you will, for the client. A lot of my clients are getting tremendous down payments. So they're that $1 million or 1.2 home, they're putting down $400,000, $500,000,
Yeah.
and only taking out a $600,000 loan.
That's true.
I've been seeing that a lot.
So for buyers coming from outside of Long Island who are new to the market, what do you most want them to know before they start shopping? Don't go shopping without money.
Buckle up. Get a bottle of wine. It's, you talk to people. I don't have many colleagues and stuff out of state, but just seeing we're in a very unique market on Long Island that I don't think anywhere else in the country is seeing. So, I have a client now coming from Canada down to Long Island, and I'm it's, what I mean?
Up,
I can't even really put it into terms. I'm until you get here, but this is it. This is the reality.
Right.
And it's been like this since COVID. So it's tough.
All right, so let's get into my rapid fire segment, Mike.
Okay.
What's the biggest myth about, mortgages that you wish you could kill forever?
The biggest myth that I could kill forever, I guess I feel like the industry has a bad rap from people that just have been unethical in the past. So it's always like, oh, you mortgage guys. So I wish I could put a squash that and, make everyone feel comfortable about speaking to a mortgage professional and knowing that they're dealing with someone who is going to help them become a homeowner.
And what about one thing every buyer should do before they ever start looking at a single listing?
Get pre-approved. Get a pre-commitment.
Thank you.
Yeah, it's a no-brainer. No-brainer.
What's a question you wish buyers would ask you more often?
I wish they would just ask more questions in general, all questions. I think a lot of them are scared upon that initial intake where it's like if they got everything out, they would feel much more comfortable. So I always encourage everyone, like, ask away.
And what do you think the best piece of advice you'd give to a client that changed the outcome of their purchase?
Follow direction. I gave them some topics and tips that they at first didn't think they can do. And then after discussing it with their spouse and family, they were able to, and it put them in a much better situation financially.
Yeah. So everything Mike just walked us through, I want to tell you what that looks like on the ground here in Northport. We are in a market where speed matters, where inventory is limited, and where you have buyers going up at the same colonial waterfront property, one-on-one, bidding against each other. So the seller's going to take the highest offer with the most qualified buyer, right? And that's where Mike comes in, right? We talked about a pre-commitment. That's something is solid, right? It's it's better than a pre-approval, right? We talked about why. So Mike and I want you to know that, you get your financing right and then you fall in love with the house. That's number one. You can't go window shopping. You got to have money.
No.
So 3 things to take away with you. Number 1, your first call before you start looking at a single property here in Northport or anywhere is, you got to get your pre-approval. You got to get your finances in order. That's number 1. Second, pre-approval and pre-qualification are not the same thing. If you get a letter from the online lender, it's probably not going to carry any weight. You're not going to carry the weight you need it to when you're making an offer. Third, don't let your rate headlines run your life. Your rate is personal. It depends on your credit, your income, your loan type, your down payment. Get your actual number from actual human being, and you may want to make that decision, from day one. If today's episode helped you, the best thing you can do is subscribe and leave us a review. It helps more people find our Homeground podcast. If you're looking for a lender in the area, I'd love to connect you with Mike, who you can reach. Mike?
You can reach me on Instagram at Mike Vass Mortgage. You could go to our website at financialequities.com, or my phone number is 631-806-5569.
I'll put all of that in the show notes. Mike, thank you. This was a conversation people needed to hear. And then all of you for being here. Don't forget to subscribe and comment on this episode.
Thank you so much for having me. This was fun.